The global dollar system is showing its day-to alignment, the phase where markets decide whether yesterday's reaction becomes a trend or stays a shock. This is where structural signals appear. Today, all eyes are on the yen. In macro markets, day 1 is emotion, day 2 is information. This is when central banks adjust exposure, hedge funds rebalance FX positions, cross-border funding channels shift. Liquidity pressure becomes visible. And the first stress point is emerging in Asia. The yen is showing early signs of vulnerability, not collapse, not crisis, but pressure. This pressure tells us global funding costs remain elevated. Carry trade exposures are adjusting. Sovereign flows are preparing for December positioning. Risk hedging demand is rising across Asia. The yen often reacts before the broader FX complex does. That makes today's signal important. What we are seeing today is not a trend reversal. It's a stabilization attempt. The global dollar cycle is entering a structural reset, where funding liquidity redistributes. Safe haven behavior rotates. Regional markets absorb the first wave of repricing. Capital flow networks begin forming new channels. This is the architecture of a systemic shift, not a crisis. The question today isn't where does the dollar go next. It's which market absorbs the next unit of stress. Based on today's alignment, the early signal points to yen Asian cross assets, short-term funding markets, commodity-linked FX. These are the first indicators to watch. Not for prediction, but for positioning awareness. Today's day-2 signal does not define December, but it defines how global markets enter December. Global investors are watching liquidity pressure, yen sensitivity, and capital flow rotation with renewed attention. Here's the signal behind the noise. Global Pulse 360 Leaf.